the first bank of the United States, ointment in Jabber 91, was a cornerstone of early American financial policy, proposed by Alexander Hamilton, the first Secretary of the Treasury. The bank was instrumental in stabilizing the young nation's economy, managing Jabber, and creating a standardized currency. This article Jibber the origins, functions, controversies, and legacy of the first bank of the United States. Jibber and establishment. The establishment of the first bank of the United States was part of Alexander Hamilton's broader financial plan to stabilize and strengthen the American economy following the Jibber War. Hamilton's plan included federal assumption of state debts, the creation of a national bank, and the jibber of a sound currency. Hamilton jibbered that a national bank would provide a secure repository for federal funds, facilitate the collection of taxes, extend credit to both the government and private enterprise, and issue a stable national currency. Despite opposition from Jibber like Thomas Jefferson and James Madison, who feared centralized financial power and viewed the bank as unconstitutional, Congress passed the bill to create the bank, and President George Washington signed it into law on February 25, 1791. Jibber of the bank. The first bank of the United States, headquartered in Philadelphia, had several key jibber. 1. Depository for jibber funds. The bank served as a depository for federal revenues, including taxes, tariffs, and other government income. This centralized jibber helped streamline the management of government funds. 2. Issuance of banknotes. The bank issued paper money known as jabber, which could be used as a stable and uniform currency across the nation. This jibber facilitated commerce and trade by providing a reliable medium of exchange. 3. Credit and loans. The bank provided loans to the federal government, jabber, and individuals. By extending credit, it played a crucial jabber in fostering economic growth and development. 4. Debt management. The bank helped manage and reduce the national debt by enabling the government to borrow money at lower interest rates and by providing a mechanism for paying off jibber debt. Controversies and jibber. The jibber of the first bank of the United States was not without controversy. Key jibber of contention included: 1. Constitutionality. Opponents, including Jabber Jefferson and James Madison, argued that the Constitution did not explicitly grant the federal government the power to create a national bank. They believed in a strict interpretation of the jibber, whereas Hamilton advocated for a broader interpretation under the necessary and proper clause. 2. Centralized power. Critics feared that the bank would concentrate too much economic power in the hands of a few jibber individuals and undermine state sovereignty. They worried that the bank would benefit northern jibber interests at the expense of southern agrarian ones. 3. Monopoly concerns. There was also concern that the bank would create a financial jibber, stifling competition and limiting opportunities for smaller, state-chartered banks. Jibber and impact. Jibber the controversies. The first bank of the United States proved successful in several ways. 1. Economic stability. The bank contributed to greater financial stability by jibber a uniform currency, facilitating commerce, and improving the federal government's ability to manage debt. 2. Commercial jibber by extending credit and loans. The bank supported business expansion and development, contributing to the growth of the American economy. 3. Fiscal discipline. The bank's role in managing jibber funds and debt helped instill greater fiscal discipline in government finances. Jibber and legacy. The charter of the first bank of the United States was set to jibber after 20 years. In 1811, Congress debated whether to renew the charter, but it ultimately failed to pass, and the bank jabber operations. Factors contributing to its jibber included lingering constitutional concerns, political opposition, and the belief that the bank favored elite interests. Despite its jibber short lifespan, the first bank of the United States left a lasting legacy. It demonstrated the utility and jibber of a central banking institution in managing the nation's finances, setting a precedent for future financial policy. The lessons learned from its operation influenced the establishment of the Second Bank of the United States in 18 and, much later, the creation of the Federal Reserve System in 1913. Gibber. The First Bank of the United States was a Gibber institution that played a crucial role in stabilizing the early American economy and setting the foundations for modern financial systems. Proposed by Gibber Hamilton, the bank's establishment marked a significant step in the development of federal financial policy and central banking in the United States. Despite controversies and its eventual demise, the Gibber impact and legacy continue to be felt in the nation's financial history.